Hello, and a very warm welcome to the first video on my channel. Today, I would like to talk with you about the 5 largest defense companies in the world. But before we dive into the individual companies, let's first take a quick look at the global picture. In 2024, global military spending reached around 2.7 trillion US dollars. That marks a new all-time record, and one country still dominates this landscape, the United States. With a defense budget of roughly $877 billion, the US has by far the largest military budget in the world. Europe, on the other hand, has fundamentally reassessed its security strategy. Since the war in Ukraine, many NATO members have significantly increased their defense spending. Several countries are now finally reaching the 2% target of GDP, and some are even spending more than that. Now, let's take a closer look at the companies themselves. And we'll begin with perhaps the most famous defense company in the world, Lockheed Martin. Lockheed Martin generates roughly 75 billion US dollars in annual revenue. But what matters even more is the company's order backlog. This backlog stands at just under $200 billion. In simple terms, that means Lockheed Martin has $194 billion in future revenue secured through contracts. For investors, this creates something extremely valuable: visibility. In very few industries can companies plan their revenues years or even decades in advance. Defense programs often run for 20, 30, sometimes even 40 years, and the payments behind those programs are usually government-backed. Lockheed Martin also generates very strong free cash flow, and the company uses that cash primarily for dividends and share buybacks. Because of this, Lockheed Martin has become one of the most reliable dividend payers in the entire defense sector. Another major advantage is something known as the platform model. A good example is the F-35 fighter jet. Programs like the F-35 do not only generate revenue when the aircraft is sold, they also create decades of additional income through maintenance, upgrades, and spare parts. And these aftermarket services often come with higher profit margins than the original production. In terms of valuation, Lockheed Martin usually trades at a moderate price-to-earnings ratio. It behaves like a classic defensive large-cap stock. Investors are not buying Lockheed Martin because they expect explosive growth. They are buying it for something else: stability, predictable cash flow, and extremely high barriers to entry. Now, let's move on to RTX Corporation. RTX generated about $88.6 billion in revenue in 2025, and it has one of the largest order backlogs in the entire industry, roughly $268 billion. From a business perspective, RTX is more diversified than Lockheed Martin. In addition to missile systems and air defense, the company is also heavily involved in civil aviation, and that creates an interesting dynamic. The civil aerospace segment can be more cyclical, but defense contracts tend to be far more stable. This mix creates a balanced risk structure. RTX is not purely a defense company, but it is also not completely dependent on the US defense budget. Another key characteristic of RTX is its high capital intensity. Developing new missile systems or aircraft engines requires enormous investments in research and development. But these investments also create strong technological barriers for competitors. For investors, RTX represents an interesting combination of defense exposure and aerospace industrial value. Next, let's talk about Northrop Grumman. Northrop generates around $42 billion in annual revenue with an order backlog of nearly $96 billion. Compared with RTX, Northrop is less diversified, but that focus is exactly what makes the company so interesting. Northrop concentrates on highly strategic programs. A perfect example is the new B-21 stealth bomber. Projects like this often take many years to develop. In the early phases, they are extremely expensive, and margins can be relatively low. But once production begins and long-term maintenance contracts follow, these programs can become highly profitable. Another major pillar of Northrop's business is space technology, and the space sector offers two important advantages. First, the technology involved is extremely complex. This creates very high barriers to entry. Second, space programs are strategically important for governments. That means they are usually politically protected from sudden budget cuts. Northrop therefore benefits from relatively stable long-term cash flows. For investors, Northrop Grumman represents a focused high-tech defense company with strong positions in space systems and strategic weapons platforms. Now, let's move to the first European company on this list, Rheinmetall from Germany. Rheinmetall currently generates around 9.8 billion euros in annual revenue, but the truly remarkable number is the order backlog. It stands at roughly 64 billion euros. This backlog clearly shows how strongly the company is benefiting from Europe's military rearmament. Compared to the large US contractors, Rheinmetall is still much smaller. However, the company is currently growing extremely fast. Revenue growth recently reached around 30%, and this growth is directly linked to the new security environment in Europe. One particularly interesting area of Rheinmetall's business is ammunition production. Unlike tanks or aircraft, ammunition is a consumable product. It needs to be constantly replenished, which means the demand is recurring. And during periods of geopolitical tension, that demand can increase dramatically. Of course, expanding ammunition production requires massive investments, new factories, new production lines, new supply chains. All of this requires significant capital. However, many of these investments are backed by long-term government contracts, which significantly reduces the financial risk. Over the past years, Rheinmetall has invested heavily in expanding its production capacity. In the short term, this ties up capital, but in the medium term, it can create powerful economies of scale. It's also worth mentioning that Rheinmetall's share price can react very strongly to political decisions and changes in defense budgets. Finally, let's take a look at BAE Systems. BAE generated around 28.3 billion pounds in revenue last year, with an order backlog of roughly 78 billion pounds. One of BAE's strongest segments is the maritime sector, particularly naval shipbuilding. Shipbuilding programs have a major advantage. They usually last many years, they are politically supported, and they offer very long-term revenue visibility. These projects are certainly capital intensive, but their long duration also creates stability. Another major advantage of BAE Systems is its geographical diversification. The company is not only active in the United Kingdom, it also has a large presence in the United States. This reduces the dependence on any single defense budget. For investors, BAE Systems is attractive because of its stable cash flow and its reliable dividend payments. At the same time, the company is investing heavily in future programs, such as the Tempest Next Generation Fighter Jet, a project that could drive long-term growth. Overall, BAE Systems represents a balanced defense company with stable earnings, strong dividends, and steady growth. And with that, we've reached the end of my first YouTube video. I hope you enjoyed it and maybe even learned something new. If you did, feel free to leave a thumbs up and consider subscribing to the channel if you'd like to see more content like this. Also, let me know your thoughts in the comments. And until next time, thank you for watching.